Hello and welcome to Mint. I am Nasrin Sultana. As Indian economy is battling macro headwinds such as sluggish consumption demand and weak investment cycle, we are facing a question if India is headed towards recession or if there are any recessionary trend. To understand what's the way forward, I am joined by Mr. Madan Sabnavis. He is the chief economist at K Ratings. So Madan, welcome to the show. So there are a lot of puzzling macros that's taking investors into a kind of a confused state. So are these challenges real?
Yeah, I think the challenges are real because, on one hand, we all talk about India's GDP growth being 6.8%, 7% or whatever. But the fact is that we don't get a feeling of 7% growth at the ground level. I think that's the reason as to why there's this discrepancy in perception. And that's why lots of people feel that there are problems in the economy. So that's one of the reasons why we have been trying to go into saying that why is it that the 7% growth doesn't really look real. And we find that there are basically two reasons for it. We have seen that two of the main engines which normally drive an economy, which is consumption and investment, both of them seem to have slowed down for different sets of reasons. So there is definitely the fact that the Indian economy has slowed down, something which even the government is cognizant of. Because probably prior to the elections, we didn't have too much of sounds being made about a slowdown. But I think it's more palpable today. And I think the government has also taken these factors into consideration. And we look at the budget, you look at what kind of sounds are being made for the oncoming credit policy. I think the move is definitely towards trying to get in measures to hasten the rate of growth of the economy.
Right. Before we head to the credit policy discussion, I wanted to know from you, the slowdown that we have been talking about, be it in the FMCG sector or the auto sales numbers that have been coming month on month, which is at a very weaker numbers. When do you see there would be a pickup, and if at all, then what could be the triggers?
See, if you look at the immediate trigger, I think it's going to be the second half of the year. Because conventionally we have the busy season, which is post-September, which also coincides with rural demand because we have the harvest coming in. We also have a series of Hindu festivals which are there, where typically households tend to spend. Now, this has been a case in the past too, where we have seen consumption spending. So the sectors which you're talking of, consumer durables, talking of automobiles, typically the sales pick up in the second half of the year. Now, this has not quite happened last year. I think it came as a kind of a disappointment, and that's one of the reasons why there was a buildup of inventory, since lots of companies hope that the demand picks up and therefore you produce according to the projected demand. And when it doesn't take place, then there's a case of buildup of inventory, and that's exactly what we saw happening last year. So to my mind, I think the immediate trigger could be the months of August, September onwards, because August, September, we have some festivals coming, there could be some kind of a demand, but the main thing comes from October onwards. That's where we could see some kind of a revival in demand. But I think the more ingrained problem which is there today is a case of spending power, especially in terms of households' income, which is related to job creation. And I think there's been a bit of tardiness, which has really affected overall spending. So immediately we, of course, will be looking at this particular part of the season where there could be the increase in demand. But in terms of the medium run, I think we need to have more jobs created, which definitely has not been commensurate with the 7% GDP growth, which we've been talking of.
So at this point of time, as the macro headwinds are very serious, as you pointed out, do you see government intervention at the moment? Because all the sectors are kind of bleak.
See, if you look at the way in which the government can actually make a difference, there are two ways. One is in a direct way, which you do it through the budget. Now, if you see what the government has done in the budgets, in fact, we should look at both the interim budget as well as the main budget, which came out in July. There was some part which was done in the interim budget where there was certain cash transfers which the government spoke of, where money would be given to the farmers so that they would be able to spend. It's not really very large in terms of the context of the overall economy, because we're talking of a GDP of something like 210 lakh crores. Giving cash transfers of around 75,000 crores may not really make a big dent. But definitely it does have some impact in terms of saying that the money is going to be spent. You add the NREGA program expenditure of another 60,000 crores. So there is a certain amount of money in the rural sector which could be potentially spent on consumer goods and automobiles if it's not spent on food items. The other part, of course, is through the way of policies. So if you're talking in terms of policies, the government can be only an enabler of policies. So if you're talking of has the government done anything wrong so far, the answer is no. I think most of the policies are actually in place, but they do take time to work out. And there have been certain policies which have come out pertaining to certain sectors, like if we're talking of automobiles. I would say that there's been some kind of a misunderstanding in terms of the policies. So at the time when you decide to increase the registration fees, you increase the cost of insurance, you keep talking of electric vehicles, which is very good from the point of view of the medium or long term. But at a time when the industry is already going through a decline, when you suddenly say that you will have to change over to the EVs, there's already a challenge which you got towards the Bharat 6, which we're going through towards. So I think that creates more kind of confusion as far as the sector is concerned. So the timing of certain policies may not have been appropriate, though they are right, something which we do require in the medium term. But in terms of the other policies of the government, in terms of enabling business, I think there's been, the government has probably done most of what can be done. And today, curiously, if we're talking in terms of labor reforms, which people are talking of, something which the government has to take on, when we're looking at the auto sector, and we have seen that based on the media reports, there's been large amount of retrenchment which has taken place. I think at this particular point of time, trying to bring in labor reforms may not really be the right thing to do. So I would say that the government, in terms of the policy package, has most of the things already placed, which are there, which would of course take time to work out. In terms of giving a direct stimulus, it has been limited to the amount of cash transfers which have been done. The rest of it is going in the form of capital expenditure, which again is quite small, in maybe around 3.25 lakh crores, which could be spurring investment in certain limited sectors as railways, in terms of urban development, in terms of roads, maybe a little bit in terms of affordable housing. But I don't think these numbers on their own can be driving the economy. It has to come more from the private sector.
Right. So there is one more crisis which had come in the month of September with the liquidity crisis. There would be, a lot of corporates have complained that there is not enough liquidity to conduct business. Do you think government would get into any kind of boosters at this point of time?
So actually there's a bit of ideology which is involved here, because today when we talk of liquidity, we normally look at the banking system, which is the main player in the market. And we also look at the Reserve Bank of India, which is the main regulator, the central bank, which ensures that liquidity is normal at most points of time. So whenever the Reserve Bank looks at liquidity, they're saying that, do I provide enough funds for the banking system? The answer to this is yes, because we have the LAF window, we have the open market operations. There has been buyback of certain amount of forex. There is talk by the government that there could be certain sovereign bonds which are raised, which will ensure that there is less pressure on liquidity. So in terms of provision of liquidity, to my mind, I think both the government and the RBI have worked well to ensure that the banking system has enough liquidity. Now the question for the NBFCs is more a case of saying that, is there a willingness of the banks to lend to the NBFCs? Right. So here I think there is a case of higher risk perception. Banks are a bit reluctant to lend to the NBFCs, or maybe they are lending to the NBFCs, but definitely not to all of them. So the better rated NBFCs are definitely in a position to command funds from the banking system. They're able to borrow money in the bond market at competitive rates. But for companies, the NBFCs who are having problems, who probably have certain fundamental mismatches in terms of the way in which they're running the business, there are definitely challenges for them. So to say that liquidity is not available is not right. Liquidity is available in very good quantities. I think both the government and the RBI have been accommodative. But in terms of the willingness and in terms of, let's say, the creditworthiness of the borrower, I think those are the factors which matter more today.
So do you think, is it right to ask you if we are headed towards a recession, or if there are any recessionary trends that is visible in the economy?
So actually we need to distinguish between a recession and a slowdown. A recession is where we have negative growth, where I don't think we have negative growth in the economy. Definitely there are certain sectors which could be having negative growth. So today when we are saying that sales are falling in terms of the automobile sector or consumer durable sector, definitely that would be a kind of a recessionary trend. But it needs to be seen as to how long do we see the negative growth rates. Now globally they say that 2 quarters of negative growth is a recession. So I would say that there could be a potential of a recession in certain sectors, but we'll have to wait for those 2 quarters. But in terms of a slowdown, yes, definitely there's been a slowdown in the manufacturing sector. I think that's where we have the problem. But if we look at the other sectors, we're looking at agriculture, we're looking at services, the picture is definitely not dismal. I think we are probably on the right path, definitely not on the path of acceleration, which I don't see happening during the course of this year. But definitely there'll be more of the existing kind of pattern of growth in most of the sectors, barring manufacturing.
Right. So where do you see FY20 closing as far as macros go?
So in terms of FY20, we're still looking at GDP growth being in the region of 6.8%. Right now, we have in care ratings, we have a target of 7%. We haven't modified it so far because we thought in the absence of any concrete information, Because even today when you're talking to core sector, we're still talking of 1 to 3 months. We need to have more data points before we are sure that we can lower the rate, but definitely the 7% goes with a lower bias. Because as I mentioned earlier, we don't expect any kind of an acceleration or pickup in the manufacturing sector. And if the monsoon continues to be good and we don't have any reversals on account of too much of rainfall, it's well distributed, maybe agriculture could continue to show the 2.5–3% growth. But the major growth impulses are going to continue to come from the service sector. And I think not just the financial sector, it's going to be the government sector which is going to dominate. And probably it's supported a lot by maybe a transport, trade sectors which will grow commensurately.
Thanks, Mr. Sabnavis. That was insightful. Mr. Sabnavis says that there is a difference between recession and slowdown, and at the moment Indian economy is only slowing down and recession is far behind. We'll have to wait and see how the macros pan out by FY20 and how far are we in achieving a 5 trillion economy. Thanks for watching. For more details and updates, stay tuned.